If you're just getting started in Forex trading, one of the first questions you probably have is what are the best indicators to use? And honestly, that's a great question. Because the right indicators can give you structure, clarity, and confidence, especially when everything on the chart looks chaotic at first. Let's keep this simple and beginner-friendly. The first indicator I always recommend is the moving average. It's basic, but it's powerful. A moving average smooths out price action and helps you see the overall trend. If price is consistently above the moving average, you're likely in an uptrend. If it's below, you're likely in a downtrend. Many beginners use combinations like the 50 EMA and 200 EMA to spot trend direction and potential crossovers. It's clean, visual, and easy to understand. Next up is the Relative Strength Index, or RSI. This indicator helps you identify overbought and oversold conditions. When RSI goes above 70, the market may be overbought. Below 30, it may be oversold. For beginners, this is useful because it gives you a clear visual cue that price might be due for a pullback or reversal. Just remember, overbought doesn't always mean sell immediately, especially in strong trends. Context matters. Another great beginner indicator is the MACD. It looks a little more complex at first, but it's basically showing you momentum and trend direction together. When the MACD line crosses above the signal line, that can indicate bullish momentum. When it crosses below, that may signal bearish momentum. It's helpful for confirming what you're already seeing with moving averages. Now let's talk about support and resistance. Technically, this isn't a traditional indicator, but it's one of the most important concepts you can learn. Marking previous highs and lows helps you see where price has reacted before. Many beginners overlook this and rely only on indicators, but price levels are extremely powerful. Bollinger Bands are another useful tool. They show volatility. When the bands expand, volatility is increasing. When they contract, the market is consolidating. Price touching the outer bands can sometimes signal potential reversals, especially when combined with RSI. But here's something important. Indicators are tools. They are not magic. The mistake most beginners make is stacking 5 or 6 indicators on one chart and waiting for all of them to agree. That usually leads to confusion instead of clarity. A better approach is to combine one trend indicator, like a moving average, with one momentum indicator, like RSI or MACD, and then use support and resistance for structure. Keep it simple. As you grow, you'll also realize that managing trades is just as important as entering them. Having clear stop-loss, take-profit, and risk management rules is what keeps you in the game long-term. Some traders eventually use trading management tools or expert advisors to help automate entries, manage trailing stops, or apply break-even rules so emotions don't interfere with decisions. Tools like Trading Management Solutions (EA) can integrate multiple strategies and risk controls into one system, which can be helpful once you understand the basics. But at the beginning, focus on learning how these indicators behave. Open a demo account, test different combinations, and pay attention to how price reacts. Remember, indicators don't make you profitable. Understanding them does. Keep your charts clean, your risks small, and your mindset focused on learning, not just winning trades. That's how you build real confidence in Forex.